Okay, so the first, and you always have to be considering multiple ideas, right? The first idea today, uh, are we going short or long? Because really that's what you want to know. Define the range, and then are we doing short or long in that range? So the thrust is down, correct? And that means theoretically that a move against it is a contra, is a reactionary move. And then the next move, if we stall, wherever we stall at, the next move is a reaction against this contra, right? From here to here. And now we've got to take a look at this swing, and we're saying, well, we could go back to the low, but we really are thinking maybe we'll hold this 63.75 to 62 and a quarter, the previous lows that got busted. And now above that, it's still positive. So we don't know anything more than the market is currently bouncing from a new low. We know that the RTH swing was the primary trade. So basis RTH, traders are going to be thinking, well, I can rebuy. Because really from that low, why not? As long as I can keep 62 to 64 support, I can rebuy it. And then maybe get this back in between this swing and get to that 68 to 69 area. And so the winner of this next swing typically will be the winner for the end of the day in terms of where we close. And I'm articulating that like this. And this is the lunch chop, where I keep saying it's much harder once we get to the afternoon session, because both sides have money. Shorts certainly do from the overnight range, and the longs certainly do from the primary trade and drive out. And we said that's the perfect conundrum, is to take out this high in that 70 area and then get above, but not take out the next one, because this is still in control until taken out. Right? You can see it. You can see this zone right here saying, nope, not until you take me out. So that's the way I want to help you see the multiple swings. And all of this gets categorized not only by the intraday swings, but this is for day trading. But then we need to do this same type of analysis on the bigger charts like we showed, right? The ones we looked at this morning. Right? That was something that we looked at earlier. So we're doing the same kind of analysis over and over and over. We said this was a perfect support that we were anticipating. I even put that out on Twitter this morning. Add a little arrow like this, meaning that's my next support, guys. That's it. You got to get by that. So part of this is thinking, and that's what I'm trying to do with this course, is show you how these smaller moves fit inside the larger ones. And that's what I call Russian dolls. That's what I call the theory of having these smaller pieces of the puzzle fit inside the larger one. So you have to see the bigger piece of the puzzle first. You don't start with your analysis on a 5 or 10 minute chart and just looking at an intraday. That's helpful for somebody really skillful, but more important than not, you've got to drop back a few levels and say, okay, where are we? Basis the bigger time frames. This is one of the most valuable lessons I can give you. And then you look for double tops, double bottoms, and there's a possibility right now we don't take out the 64 to 62, and there's a possibility we don't take out the high either, because the market is trying to consolidate. And this is where you wind up over trading, expecting too much. You're expecting this afternoon what you got this morning, and that's not necessarily true at all. So that's why I say the best trades are done, and certainly for the long side, and obviously for the short side too. We said this morning, okay, good possibility lows in, boom, it is so far. I still say I think the low is in for the day. That doesn't mean we're not going to come back and revisit, no, but I don't think we'll do that today. Hope that helps.